Wow series for the month of July. As you all aware that Wow series means Women on Wednesday, and we are doing a web series for women. And main part is that all the faculties are women in our Wow series. Participant can be male member, but we are taking faculty as a female as a faculty only in Wow series to promote and to generate more faculties in females. Okay, so but before that, I request Ms. Raji to run our motto song. As, please, Ms. Raji. And I request all to put your hand to your heart for our motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदुनास्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you, all the participants. So we have with us our today's faculty, CA Tanvi Vora, who is practicing in FEMA. And as a coordinator, we have CA Seema Bagla from Kandivali. She is also practicing senior member. And second coordinator is CA Julisa. He is also practicing in Andheri. And most energetic chairman, CA Arpit Kabra. He is also with us, and he is regular with us to promote women and to guide the women CA how they can grow and how they can grow practice, or they can be in service. They actually how much growth they can do. And he's always very passionate about that, and he's regularly behind me. Madam, kuch to karo females ke liye. So I request Arpit to say a few words on this page.
Hello everyone, good afternoon, and welcome to this yet another episode of Wow series. I think Wow is absolutely wow. We bring in a lot of sessions. The main power behind this, the women. I think this entire series is conceptualized for women chartered accountants, and what we want to do is it's a small little concept that we as a council are always thinking around, is what should we do if we have to bring back our women chartered accountants back into the fraternity. Do we ask them to learn auditing again? Do we ask them to do assurance again? Do we ask them to do all of these again? But we've conceptualized a program wherein what we want to do is, through Wow series, we want to reach out to all our women chartered accountants and tell them, look, a chartered accountant in his daily schedule gets up, is not sure what is the lead that he's working on. So he has to go out and get work. Then also he has to start working on them. Then he has to get the staff to work on that. And then also ensure deliverables are made. Ensure reports are made on time in the format that is prescribed and a correct format. And then it goes on and on and on. Then he has to train. Some people will go. Then he has to get new people. So recruitment bhi unko hi karna hai. Then CAG, MEF empanelment karna hai. Then billing, receivable, recovery. And apart from all of this, he has to do every other aspect what is required. And who is training the staff? Who is taking care of the staff? Who is developing the culture of the firm? No one. Now, in this space, if a firm of say 50 women chartered accountants, each women catering to at least 5 to 10 CA firms, and every morning their routine is fixed. They have to talk to one promoter, one proprietor, one partner of a firm and say, hey, chartered accountant, what is up? What is next? What is your to-do list today? What's going to happen? Are you meeting this person? Are you meeting that person? Are you aware about this tender? Are you taking care of these kind of empanelments? all of this XYZ, and will take care of recruitments, will take care of deliverable management, will take care of all the reports. She has to sit with a computer, a printer, and a phone, talk to the staff. If required, go and physically train that staff, come back from her home, take care of her priorities, take care of the kids, take care of education, take care of the family, and as well as take care of the entire firm, the culture of the firm, train the firm, and be a big function of that firm. We call that as a practice management consultant, PMC. Now, this is the dream that we are working on, and hopefully we are devising this strategy. Through this program, I want to reach out to all of you and explore whether can we really do this kind of a function, because when every business needs a consultant, somewhere our chartered accountants also need a consultant or someone who can always talk to and take care of the entire setup of the firm. Now, for proprietorships and for small partnership firms, it becomes very difficult. In the era of networking, somewhere we'll be lacking if we don't get good support function in terms of a chartered accountant. And therefore, one big role that we can play, we can all bring these firms together and uplift the entire experience and the entire working, the way of working. So the delivery management, the wisdom of the firm, all can be taken care by a chartered accountant and can really ensure that the entire firm grows organically. Now, this is a small idea. This is a small dream that we are focusing on. Apart from that, these are some of the activities that we are doing daily. So Mondays and Tuesdays, we have left for people to do something, whatever that they want to do. Of course, we have Vikasa, because Pinky Madam is also handling Vikasa. So she keeps us busy on Monday, Tuesday with Vikasa activities and some updates on Tuesdays. Wednesday, we start with Wow series. So Wednesdays are reserved for women. Thursdays, we have Tech Edge, the technology series that you can see right here. Friday, we have Friday Fundas, and we have Nest Cafe. Nest Cafe is an absolute amazing phenomena that has happened to us at WRC. These are evening sessions and networking, entrepreneurship, soft skills, and technology. We only talk on these 4 aspects. We get a good panel and free conversations, superb coffee. Absolutely end your day on the Friday a little early, come to WRC at BKC and indulge in these conversations and over coffees and have a good networking session. That is what is Nest Cafe all about. Another thing that we are very excited about is a Gurukul at WRC. Now, if all of you as women chartered accountants and who all are participants today, let me tell you and reach out to you that if you are aware about any chartered accountant who is in industry and he usually says that I need to train myself on this or I need someone training on, say, a particular aspect, look no further, come to WRC, we are here to train them. So you can bring all the members in industry and business. They can form a group of 25-30 people, come here, tell us what topic you want to do. We'll set that up and you can have that training session right here in WRC. We can be your training partners. You need not rely on anyone else. So you can come to us. We'll get the best of the speakers, best of the files. Like for example, Tanvi today is talking on LRS. And suppose there is a firm which comes and says that, hey, look, this is my CFO says that, these are my chartered accountants and these are 5-6 small little entities, private limited companies. And they want to understand what are FEMA compliances, what are RBI compliances on all of these things. So we could invite Tanvi and she could do this Gurukul at WRC. So this is a very important, and a lot of people are making a super use of this product. You can say startup, social audit, soft skills, auditing, tax, anything and everything at WRC. We'll set that up for you. Startup Lab is another important area that we are working on. We had an angel round of investors meeting. We have a lot of people who have ideas. We are giving them that space to come and explore that ideas. And we have good audience who can hear them out, curate them and see what can happen. So maybe the future can unfold for them. Niryat series is for the outsourcing services. Brilliant work that we've done in Niryat series, because so much of volume about chartered accountants have been spoken about in the World Congress. It's been the talk of the town that if chartered accountants can really, Indian chartered accountants can really render their services in various spaces, including Nigeria, Namibia, Australia. We recently went to South Africa. I think even they are looking forward for having some support services from India. So all of these outsourcing services can be set up here. Dubai, we have done corporate taxes kicking in Dubai. They will need a lot of support here. Indian chartered accountant, the best in the setup to try and explain corporate tax and the compliance framework for anyone there. Australia, New Zealand, US, and more importantly, Ireland. So these are some of the areas that we've targeted in Nirya series, and a lot of sessions keep on happening there. So if you wish to have any idea about, suppose one particular jurisdiction, you can let us know. We'll be happy to set that up for you under the Nirya. Tomorrow, 13th and 14th, we are doing tax clinics. WRC will be hosting free tax clinics to ensure that common people can file return of income very effectively. If they have any scare, any threat, any concern about sharing their financial information with anyone, everyone, they can come to and talk to a chartered accountant who are there in BKC. I would request all of you through WOW, through all of you who are here, if any one of you who want to set this up as a tax clinic anywhere nearby you, please let us know. We'll be happy. Maybe one day clinic we can set up where you can invite, say, auto rickshaw union, say hawkers, say some school bus conductors and drivers, or whoever, any aspect, any common man, any citizen of this country. Let them know financially how should they be aware, how can they plan for their students' education, if they want a loan, how should they prepare their files, and XYZ. That is one kind of a program that we are running at WRC, tax clinics. I'm sure you must have got mails about it. Same way, we have a Samvad Vishwas Ka trust clinic at WRC. Important, very important conversations about will, nomination, and any trust related issues. You can always talk to the most trustworthy people, chartered accountants in the city. So you're all welcome. These are some of the highlights of what we do at WRC. Look forward to having more and more. If any suggestion, any clarification, please feel free to reach out to us. But more than happy. Pinky Madam, great facilities in the WOW that we keep on talking, great conversations. These are some very, very important sessions. I would request all of you, please share all of this in your own social media spaces so that more and more women chartered accountants come to know. We just came back from a flying visit from Jamnagar to Junagadh to Rajkot to small areas in Shasan and all. All of these women chartered accountants are very happy that there are these events going on. So somewhere we are not aware, but through all of us, we are able to impact a life of a chartered accountant, more importantly, women chartered accountant through these programs. So more you talk about it, more you share on LinkedIn, more you share on this, probably they will know more and it will reach out to someone who really needs this. With these words, thank you very much. Thank you, Julie and Seema Madam, for joining us in this series, and look forward to a learning session with Tanvi. Over to you, Pinky Madam.
Thank you, Chairman Sir, to give us the insight of what our WRC is doing. And I recognize the presence of our treasurer, WRC treasurer, CA Ketan Sayya Sir. And he is also very hardworking, practicing CA and doing very good work for WRC and for all the CA fraternity. Ketan Bhai, if you want to share something about.
Absolutely a backbone, that's why he's behind. And because of all of these people, we are working so well in the entire council. Ketan Bhai.
Thank you, Chairman. Thank you, Vikasa Chairperson, Pinky Madam. And very good evening to one and all. I think the two program which the Chairman is thinking, and he must have, I'm sure he must have spoken about it. I am also very much excited and I'm looking forward for a successful practice management sessions from you all. And if you need any support, any training from any senior, do tell, we'll line up that. So we need to create some women who are expert in practice management, who become expert. And let me tell you, there are firms in Mumbai unofficially. I have also spoken to some firm today also. So everybody is saying that we also need a consultant. So now with this idea of Chairman, I think if you people can implement this, there will be a lot of both the way advantages. It's a win-win situation. You all can work from home, be a consultant, guide to this medium-sized firm. See, everybody wants to grow today. और कहाँ हम अपना काम करने में ही पीछे रह जाते हैं, दिया तले हमेशा अंधेरा रहता है, वैसी हालत है. तो we need some such independent person who can tell कि भाई आपके infra यहाँ change करिए, यहाँ पे data change करिए, ये करिए. How do you align your meetings? How do you do the follow-ups? So I think there's a real need of practice management consultant, and I request somebody like you all people to take a lead in this. And let's try and implement this somewhere in October, full-fledged. हम दोनों चीजें, team of the women CA who are ready to consult the chartered accountant, and we can put it in our newsletter and invite the CA firms who are ready to take the consulting. I'm sure there's a dearth. I mean, a lot of people are wanting to improvise their working, बट ये आइडिया को थोड़ा सा हम होमवर्क करें, थोड़ा सा 1-2 महीना इस पे काम करें एंड we can implement this. I think it's a great idea. That's my request also to all of you, and thank you so much. Over to you, Pinky, again.
Thank you, Ketan bhai, to elaborate this faculty PMS scheme. So I also request and appeal all the females to take advantage of this program, which are brainchild of Arpit sir. So now we can start our program, our event, and this is on LRS on TCS and what that international taxation on property. So nowadays, when we are doing business abroad and all full universe is one. So we have to understand what the Indian income tax, what the international taxation, and what the rules is as per new budget, what is applicable today and what will be applicable on from 1st September. So for this, we have with us our CA Tanvi Vora. She is working in FEMA only, and she is very good faculty. So I request CA Seema Bagla to formally introduce our today's speaker. Seema ji, please.
Thank you, Pinky, for giving me an opportunity to introduce CA Tanvi Vora. We have a big list of her achievement. I was just looking through and degrees, but I will introduce her in short. Tanvi is a qualified chartered accountant from India. She also holds a general LLB degree from KC Law College, Mumbai University. She has also received an advanced diploma in international taxation from the Chartered Institute of Taxation, United Kingdom. She holds an advanced LLM in international tax law from University of Amsterdam, jointly with IBFD, and was awarded the UVA IBFD scholarship. She has over 10 years of experience and is regularly providing services under Indian FEMA laws, transfer pricing, and international taxation consultancy services, and is currently working on various research projects for international tax. She is a director, tax and regulatory at Hardik D. Mehta and Company, specializing in advising clients on exchange control law and regulations, transfer pricing, regulations, and international tax law. In the past, she has worked as a partner of PR Bhuta and Company, a boutique firm with special focus on immigrating individuals. She has also worked with KPMG India in transfer pricing and with TP Oswal and Associates, Mumbai, India. Her varied work experience includes transfer pricing, compliance and consultancy of large MNEs, and has also advised on numerous cross-border transactions. She is serving as a convener for the Membership and Public Relations Committee of the Chamber of Tax Consultants, India, since the year 2020-21 to 22-23, and is also serving as a convener for the FEMA Study Circle as part of International Taxation Committee of the Chamber of Tax Consultants, India. She has co-authored the publication FEMA Compounding Orders, a comprehensive analysis published by Bloomsbury India in July 2019, and also Volume 2 published in October 2020. She is a regular speaker at various forums and has published a number of articles of FEMA, transfer pricing and international tax. I welcome Tanvi ji for her energetic speech and enlightening us on the topic. Welcome.
Thank you so much.
Thank you, Seema ji, to give this was not a brief introduction. It was in detail. I thought abhi khatam hoga, but your achievement is too huge.
She has so many degrees कि मैं उसको कितना कम करूं.
That's why I'm saying we are very fortunate to have you as a faculty for today's event. So Tanvi, the floor is yours. Now you can start.
Thank you so much. I'll just share my screen.
Okay, ma'am.
Okay, yeah. Full
Now you
screen,
can see
right?
this.
Thank you, Arpit-ji, Ketan bhai, for the introduction, and it's really great to see all the initiatives that WRC has been doing. A lot of them, I'm sure, are fabulous. I have also, attended a couple of them, and I wasn't aware of a few, and I'm surely now going to take advantage of those and try to attend and, get to know the institute better. I would say it's personally my fault for not this. And while your idea for the practice management consultant is really nice, because our CA fraternity now, I just personally feel, has become almost like the doctors, how you need to specialize in a certain field. But at the same time, you have to be updated about everything. It's like, if I'm a doctor of the heart, I can't say I don't know anything about the nose or the brain. So you have to be updated in all fields. And at the same time, you have opportunities that open up to you in various fields. So it's always helpful and fabulous, in fact, to know about all other fields while you specialize in one item. So going into that, and the topic today that I'm going to take is on the LRS amendments that have been happening in the past couple of months. And everyone would be reading in the newspaper and hearing on the news about the TCS applicability on these LRS remittances. And while they amended something, then in May they made another amendment to make the application broader. Then they realized they're not, as a government and as a country, we're not prepared in the back end for implementing these things. They went back on the date of applicability, and now it's all postponed. So there's a change, and then back to change, then back to change, and now we are back to square one. So I'll run everyone through that part as well. So for the LRS portion of the amendments that I'll be carrying on, just to give a little bit of background, I'll also be providing a brief background on these provisions. But in case there are any queries, in fact, anywhere during the presentation, please feel free to ask, because it will be better if it's addressed at that point only. I think Pinky ji or maybe one of the coordinators may stop me if needed, to ask any of the questions that have been raised by the participants.
Yeah, Julie and Seema madam will be there, and
Okay.
they will. So you would like to take the question in between, or you would take at the end?
So at least, or maybe what I can do is, once I'm done with LRS, take those questions, and then TCS and those questions. But a lot of it is interconnected. So as in when they come up, I mean, as you seem relevant, because sometimes if it's something specific that I'm covering, it's better I answer it there than, the audience being lost at the end, what was being discussed.
Yeah. So Seema ji, you can take that thing now. If there is any question relevant to this, then you can take up. Yeah.
So maybe I'll run a little quickly through the LRS portion of it, because to reach the amendments, I'll need to maybe a 10-minute background. So I'm not sure how well versed the participants are with the FEMA history that went in before we had LRS. When I say LRS, Liberalized Remittance Scheme, it is a specific scheme provided by RBI, of course, through the central government, to resident individuals for transactions to be conducted. So for remittances to be done from India. So before the LRS came in, we had a set of rules, and these rules are still there, which is capital account transactions and current account transaction rules. They're both two different rules. What was covered under current account transaction rules is what they've provided: a list of prohibited activities, transactions, list of transactions which are allowed only with central government approval, and list of transactions that are allowed by RBI. There was a time when these Schedule 3 list, depending on the transaction, they had different limits that they had set. Supposing if it's for private visit, then an X amount. Then if it's for medical, an X amount. Separate limits were set for different transactions, so different baskets were created. But in 2004, February 2004, LRS was combined into one limit for, in fact, not only this Schedule 3, what I mentioned, but for current account transactions as well as capital account transactions. Over the years, the RBI and central government will reduce the limit that you can remit under this LRS scheme. It has been fluctuating up and down, depending on the forex reserves in India. It is a government decision that they take on a broader level. Of course, it does not affect you. It affects you and me specifically, but we have no say in that because it's the reserves that the foreign exchange reserves that the country holds as a whole. I have provided here like the date-wise kind of change that has happened to the LRS limits, but since 2015, we have been on a fixed limit of 250,000 USD. What this means is in a single financial year, so that is from 1st April 2000 whatever, so let's assume this year 2003 until 31st March 2024, a single resident can remit up to 250,000 USD in totality for all transactions listed under LRS. And like I explained in my previous slide, that now LRS includes all current account transactions, capital account transaction, or a combination of both. This scheme is not available to corporates, to partnership firms, to HUF, or to trusts. It's only available to individuals. There have been cases where, HUFs try to remit under the LRS scheme. And there were times when banks were not fully aware. A couple of years ago, maybe I could say 8-9 years ago, more of the small size banks that are not very well versed with this, there have been mistakes that have happened that an HUF has remitted under LRS, and then you have to regularize that transaction, bring that money back because it was not technically allowed to do so. There are other facilities available to partnerships, corporates, HUFs, but not the LRS scheme. The scheme is available to all residents. It's applicable to all residents. So if I am a NRI, I have moved out of the country, LRS is not applicable to such people. For them, there are other facilities. A lot of you who have maybe dealt with FEMA would have heard of the famous or the well-known 1 million scheme. That scheme is something that is available to NRS, which is separate, which is not. So LRS, in short, is applicable to residents, and it does not even say resident citizens. It says resident individuals. So if a foreign national is also a resident in India as per FEMA, LRS applies to such individuals. It's also available to minors, but in case of minors, issues that may happen is the declarations might need to be signed by the guardian. There are cases where if you're undertaking a capital account transaction by a minor, say for example, purchasing shares in a foreign company, which is a capital account transaction, I'll come to an explanation of what all is covered under capital account transactions. In such cases, Indian Contract Act does not allow minors to enter into contract. Purchasing shares of a company is a contract. So those kind of hurdles are applicable and can stop you from undertaking a foreign remittance. But as such, a minor also has its own limit of LRS. So for example, for foreign travel, there is no Indian Contract Act or anything involved. So as an individual, I can undertake foreign travel for up to 250,000 in a year. In totality, of course, other foreign LRS transactions also will be combined. But as a minor, say my child can also utilize his or her own limit. The LRS master direction provides that credit facilities should not be made available for capital account transactions under LRS. So you have to be the owner of those funds to remit under LRS. If you want to buy a property outside India, you cannot take a loan in India and then remit that money to undertake that capital account transaction. And this is to ensure that, if you can't do something directly, you can't do something indirectly. I may have utilized my 250,000 USD in the current year, and that is the amount that I have available as the LRS limit. I asked my wife or my husband to also remit 2,50,000, but he doesn't have that much balance, and I transfer that to him as a loan and he does that. That is not permitted under LRS. So it has to be, and you are giving a declaration in Form A2 with respect to this, that you have not taken any credit facilities nor loans have been taken. Just a second. Has the screen frozen for me? The slide is not changing. Oh yeah, it changed. So when I come to permitted capital account transactions are of 3 categories, which can further be broken down. So permitted capital account transaction is opening a foreign currency account outside India, which is freely permitted under LRS. Acquisition of immovable property outside India, ODI transactions outside India, which is investments in unlisted companies, foreign companies, and overseas portfolio investments, that is investments in foreign listed companies. Of course, then specific rules, regulations to be followed, specific things that are allowed, not allowed under the FEMA overseas investment rules and regulations have to be followed. But the whole crux of the permissibility of these transactions comes from the capital account transaction rules. And the third one is extending loans, including loans in Indian rupees to NRIs. So there is a little bit of debate in the professional circle over this, because the words here used is extending loans, including loans in Indian rupees to INR. However, the extending loans would mean foreign currency loans, which was earlier dealt with, under FEMA 3R, where there was a specific, FEMA 3R means notification 3R. Whenever I mention some other FEMA 3, FEMA 4, 120, etc., it refers to the specific notification under FEMA, which gives you certain rules and regulations in connection to that transaction. So there it provided a list of or a specific transaction that permitted forex lending by a resident to non-residents. That rule actually has not come from the old notification to the new notification, and prescribed limits in that regard have not come. So there is not a lot of clarity whether what transactions are permitted, but it also helps that loans in Indian rupees to NRI relatives is permitted. So you may ask that actually there's no foreign remittance happening. You are giving the loan in Indian rupees to NRI relatives. But what here we need to see is, and that's the reason it specifically specifies that you may transfer from your account to the resident account of NRIs, the NRO account, which is the types of accounts that a non-resident can hold, either an NRO or an NRE account. But it will still be considered as part of your LRS limit. So if I give a loan of 1 crore to my NRI relative in his NRO account, that gets utilized towards my 250,000 USD limit. Of course, it's equivalent USD. So by that much less, I can utilize other items under the LRS. I hope everyone understands that it's a cumulative limit, and if there is any confusion in that regard, please feel free to ask questions, because it does not mean I send a loan of 250,000 USD plus I buy a new property of 250,000 USD, or even on top of that do foreign travel of whatever amount. It is all combined together. I can invest, say, whatever amount in a property. I can give loans, I can open a foreign currency account, I can have investments outside India, I can travel and utilize my LRS limit. But all of that combined should be within 250,000 USD per year. Of course, this is up to March. Next 1st April, the new your limit will go back to 0 and you can undertake the transaction next day. Any questions? Ma'am, if there are any questions, you can let me know. This is just
They said that there is one provision which says that if fund is not invested or return on the fund is not reinvested within 180 days from the date of remittance, it shall be brought back. Does parking in FD overseas will be treated as investment?
I have about 4 to 5 slides on this issue because this is one of the burning amendments that happened. I will cover it when I go forward.
Yeah.
Also,
You can continue.
Question.
You can continue. We'll take the questions last.
Yes. Yeah. So even the second question is quite a good and relevant question. I can address it here, and also later there will be a point when I'm talking about this 180 days. So of course, when you give, what I mentioned was the form A2 that you need to fill when any person is undertaking an LRS transaction. So any LRS transaction will have form A2, but if it is a capital account transaction related to ODI or OPI investments, there will be additional compliances required. So when we fill that form A2, we have to give a purpose code in that, whether against what purpose we are remitting that amount. For example, this person has given an example of investment. In 99% of the cases, if you're doing it towards investment, towards acquisition of property, etc., banks would sort of insist that you remit it directly to the seller of the property or the investee company. But let's take, for example, you are opening a bank account there, or you're remitting to some other bank account, and instead of using it for that purpose, you're using it for another purpose. It is technically a contravention of FEMA Act, because FEMA Act section 10(6) provides specifically that you cannot, you have to utilize the remittance for the purpose that you have provided. But at the same time, there are cases, and which when I cover the 180 days amendment issue, you may have remitted for this, but you have to utilize it for something else. We have done personally in a few cases where we write a letter to the bank and intimate them that the purpose for which it was sent was this. We are utilizing for this purpose, provided both purposes are, of course, permitted transactions. If something is a non-permitted transactions, you cannot do this. And under FEMA, one golden rule is something that you cannot do directly, you cannot do indirectly also. So if you're not allowed to do derivative transactions directly, you cannot send money outside India and then say, okay, now this money is lying there, I'm going to do derivative transactions out of it. So as a resident, you cannot do something indirectly what you could not have done directly. But in case both of those activities are permitted transactions, it is always preferable to just intimate the bank that we have utilized this for some other purpose. This is just kind of a bird's eye view of the previous ODI and OPI transactions. I probably will, because it's already 4:45, I will not go through deep of what is covered under ODI and OPI transactions, but I have a one slider, which is quite self-explanatory, but I will also again just, explain how I have, shown this on my slide. So a resident individual, RI, that is a resident individual, is allowed to undertake ODI investments. So ODI investments is investments in unlisted foreign companies. And they're also allowed to undertake OPI investments, and OPI is listed foreign entities. In the general scenario, this is a very layman's explanation of ODI and OPI. There are, of course, much in-depth definitions involved and breakdown of it. And we can have a separate session on ODI, so overseas investments and the entire this. And I'm sure it was actually already done, because when the new regulations and rule came out in August, some sessions would have been conducted. What as an individual you're allowed to do is you can undertake ODI in an operating foreign entity, but it should not be in financial services, and that entity should not have a step down. So say as an individual, I can invest in a Dubai entity, and the Dubai entity does business. But if the Dubai entity has an investment in any other entity in Dubai, in another country, anywhere, then as a resident individual, I cannot invest in that entity. OPI is permitted, and also then they've given 8 categories of investments where it could be in the character of ODI or OPI. So that's capitalization of any dues. So if I will have any receivables from a foreign entity, they can capitalize it and convert it and give me equity against that receivables. Bonus shares can be acquired from that foreign entity when you already hold shares. You can acquire shares through swap because of merger, demerger, etc. You can also acquire shares through gift, and again you can also gift shares as an individual who is holding foreign shares. There are specific rules in that regard, what is permitted, what is not permitted. As inheritance, you can freely inherit any foreign company shares. In fact, not only under the overseas investment regulations and rules, under section 6.4 and 6.5 of the FEMA Act itself, it gives you a blanket permission to inherit any foreign securities, property, money, a lot of things that are listed under there. So it allows you 2 things: to continue to hold them in case of change of residential status. So say I was a NRI, I had acquired shares of a foreign company. That time FEMA did not apply to me because I'm not in India. So there's no question of FEMA. Now I've returned back to India permanently and become a resident in India. These sections allow me to continue holding these shares, even though now I've become a resident and FEMA starts to apply to me. Sweat equity shares and minimum qualification shares and ESOP, EPS schemes are also permitted as a mode of acquisition of foreign company shares. There are certain relaxations, and I'm again skipping this for now because it will take a little bit of time. But if there are any questions, I'll take it up on this. That they've given certain provisos that, of course, in case capitalization, it will be through ODI as an ODI only. But they've given a dispensation for minimum qualification shares for inheritance that, if the holding is less than 10%, whether listed or unlisted, it will always qualify as OPI. So those specific kind of provisos are given, which are self-explanatory. When I mentioned about acquisition of foreign entities shares by way of gift or inheritance, this is permitted, provided, so this is the broad parameters what are permitted from a PROI, that is a person resident outside India. So non-resident gifting foreign company shares to a resident, it's allowed without any limits. Inheritance, in both cases is allowed, so that a resident is inheriting from another resident shares of a foreign company, that is also allowed. Sorry. And gift, they have specific rules and what they've permitted. So gift from a resident to a resident of foreign entity shares is only allowed between relatives, not between me and Seema ji or me and Pinky ji, but only between relatives, and relatives is specifically defined. Gift between a non-resident and a resident is also allowed, but subject to applicability of FCRA provisions, because there are parameters under FCRA, and I'm sure there have been a lot of sessions done on FCRA as well. It should not be considered as a foreign contribution in India or any kind of gift or donation. And if it is above those certain limits that are applicable under FCRA, there might be a question of intimation or approval, etc., under the FCRA regulations. ESOPs and EPS schemes, an employee who is a resident individual who is an employee or a director of the company or is the employee director of the company and the shares are being, the ESOP schemes are of the foreign entity of which that company is a subsidiary, only in that case. So the pre-requirement of being an employee or a director is applicable in this case. So advisory shares, what we are used to seeing in startups, etc., without being an employee of the company, being a or a director, just being a normal advisor, you cannot receive foreign company shares under the ESOP plan or the ESOP scheme. Acquisition of property, also it is a permitted capital account transaction. This table also, again, I will not go through it specifically. I have listed the possibilities from a resident to resident gift, inheritance, purchase, or non-resident to resident transfer, and that is quite self-explanatory. And these are the permitted capital account transaction in relation to immovable property outside India. Sorry. So coming to now the permitted current account transactions, and this is where a lot of it and a lot of changes that have come in the past have come, and confusion always also lies in a lot of these cases. So what is listed under permissible current account transactions is private visits, donations, going abroad on employment, emigration, maintenance of relatives abroad, business trips, medical treatment abroad, and facilities available to students, so studies abroad. So when I break these down, and the master direction has provided some guidance, and some questions always remain. And all of this, again, I keep repeating myself, but it is all a combined limit of all current, all capital, etc. So what is permitted under private visits and what is included in that transaction is all tour related expenses, including rail, road, any cruise, cost of Eurorail, because that when the entire LRS was formulated, Eurorail was very famous, and it still is a very nice this. Any passes, any tickets outside India, as well as overseas hotel lodging expenses are always included in the LRS limit. And mind you, even if you pay this in Indian rupees to your tour operator or in foreign currency, it is still included in your LRS limit. So if you kind of say that I am paying this to my agent here, he's doing all the booking for me, so it's paid in INR, so I don't include it, but that is not the case. For this transaction, for foreign travel transaction, it is specifically said that the amount can be collected in INR or in foreign currency, and it is included in our LRS limit. Gift or donation, and it specifies that the gift or gift may also be a rupee gift to an NRI PIO, but of course a relative. The special dispensation for rupee gift is provided that it is only to the relative of the individual and in his NRO account specifically. Because NRO accounts are considered equivalent to resident accounts, and that is why it can be, how do I say it? So you need a specific limits, or if you go above those limits, you need approvals to remit outside India. It is not freely repatriable. The next category is going abroad for employment, emigration. For emigration, this is also quite a heated topic always in the newspapers. You see a lot of ads also coming from all these immigration consultants, or even from foreign countries, that say that you pay us this much, you come to our country, we will give you permanent residence, etc. So what immigration says, that this is not this immigration permission. Sorry, sorry, can you give me a second? Yeah. So of course, so 250,000 limit applies towards immigration, but it specifically provides that over and above 2,50,000 also might be permitted to meet any incidental expenses such as moving costs, etc. But it very, very specifically says that this excess remittance cannot be utilized towards earning points or credits to be eligible for immigration. So the very famously known as the EB-5 visa, where they say you invest, I think at the moment it is 8 million. So they US says that you invest 8 million in our country, you send, and we will give you the H-1B visa that they have or the green card immediately. But that is over and above our LRS limit of 2,50,000 per person. So it very clearly said that that amount over and above 2,50,000 cannot be remitted towards earning any of these points. Once you have the visa or the specific PR card, etc., and then you need to send for certain expenses, etc., that's a different thing. That is permitted. Other permitted current account transactions is maintenance of close relatives abroad. For example, if you have a son, daughter, or even parents living abroad, and for their maintenance, if you need to remit money, it is permitted up to 2,50,000 USD per year. Travel for business or attending conferences or specialized training or for meeting expenses is also a permitted activity. But it specifies that if an employee is being deputed by an entity and the expenses are borne by that entity, such expenses shall be residual current account transaction outside the LRS limit. So in those cases, it shall not be counted towards the LRS limit of that employee who is being deputed by an entity. It's also the last two categories are for medical expenses and for meeting for studies abroad. For medical expenses also they have listed and formulate given certain examples of what all is included under meeting for medical expenses, which is for checkup abroad. It also includes in that the expenses towards accompanying attendant, as well as connections in relation with medical treatment abroad. You may have to hire a nurse, you may have to stay abroad for a certain number of days, etc. All of that is included. And it says that if the amount is up to 2,50,000, the AD bank does not even need to ask for any kind of documentary proof, etc. But if there is a need to, because medical treatment abroad is very expensive, they've given the permission to the AD bank itself, and you do not need to go to RBI for approval, that they can remit more than 2,50,000 also, in case of a proper estimate from the doctor that these are the expenses that will be done, this is why it is required, etc. And one of the last one listed is studies abroad. Here also it says that up to 2,50,000 is permitted without insisting on any estimate. However, even over and above 2,50,000 would be permitted by the AD bank itself only. You do not need to go to RBI approval based on a specific estimate given by that institute abroad. If you need to go to Harvard, etc., if it's very expensive, you may need it. And the last but not the least, they have a last residual category called any other current account transaction, which is not covered under the definition, which is not there above. So it is actually quite a open and broad residual category, but it should be understood as something that is not listed here, but it is still a current account transaction and does not fall under capital account. Say, for example, purchasing a software of Microsoft. You are buying it from Microsoft, the Microsoft 365 that we buy. It would be a current account transaction, but it does not fall under any of these specific ones. But of course, it is permitted as any other current account transaction. What are the prohibited transactions under the LRS scheme? There is a specific list of prohibited transactions. That is what I already mentioned, Schedule 1 and restricted items in Schedule 2 of current account transactions. Then remittances from India for margin money or margin calls in overseas exchanges is not permitted. Purchase of FCCBs is not permitted. Remittance for trading in foreign exchange is not permitted unless you are following the rules of OPI. That's what is permitted under portfolio investments. Capital account transactions to any non-operative FATF and countries is also not permitted. Therefore, FATF is organization that looks and it kind of provides updated lists every time that they are overviewing countries that fall under terrorist countries or supporting terrorism and those kind of things. So this list is regularly updated every maybe 6 to 8 months or whenever there's some developments happening in our global politics. So if it's from a certain country like that, for example, if I remember correctly, Pakistan is in those lists. So capital account transaction into Pakistan would not be permitted under LRS. Remittances directly or indirectly to those identified as posing risk of terrorism. This is connected, is also not a permitted LRS transaction. And the last one is an important one. Gifting by a resident to another resident in foreign currency for the credit of foreign currencies, for the latter's foreign currency account is not permitted. It is very specifically given now. So I have a foreign currency account in the Netherlands. Seemaji being a resident, also has a foreign currency account in another country. I cannot gift any kind of foreign currency to Seemaji. At the same time, I can't even remit in her foreign currency account technically, but here what we are covering is gift of forex from a resident to a resident, so which is clearly not permitted. Again, this goes to the entire golden rule of FEMA, what I said, that what you can't do directly, you cannot do indirectly, because again, this is for finding a loophole to remit something over and about 250,000. I use my LRS limit, Seemaji uses her LRS limit, and then she needs 5 lakh, not 250,000. So I just remit from my foreign currency account to her foreign currency account. I gift it to her. That is not permitted because that goes over and above her LRS limit. It's a loophole that the RBI has kind of closed down. So there are specific discussions on consolidation of LRS. So again, going to what is permitted, like going with the same example, the 250,000 limit that Seemaji has utilized of her own, and I have a 250,000 limit separately. The LRS scheme provides that consolidation is permitted, but consolidation is permitted only in respect of family members. So me and my husband can probably consolidate our LRS limit, but it is again specific to conditions. Conditions such as co-ownership, that if both of us are remitting to a foreign account, we should be co-owners of the foreign currency account. If it's a property, then there is a discussion over that, because some words have gone missing in the new amendment that has come. But my personal view would be, if it is a property outside India, if I am consolidating certain LRS limits, both me and my husband, for example, should be co-owners in that foreign property to consolidate the LRS limit. So we want to buy a 5 lakh USD property outside India. Both we consolidate the LRS limits in both cases, and then be co-owners of that property, or at least co-owners, co-partners in a foreign current. Let me take an example of also a foreign entity. I have bought shares of company A in the US for 5 lakh USD. For that, I have paid 250,000. My husband has paid 250,000. That is not a permitted transaction. He also has to own that 250,000, and I have to own that 250,000, and share certificates also should be issued in each person's name.
No, you mean to say that suppose I have 5 lakhs rupees, I cannot add my husband to make it 250. It should be co-owner. He should be a owner of.
Yes, just madam, it is 250 USD, so which would be equivalent to about 8 crore per year.
Yeah.
But yes, that is what I mean. So co-ownership, so even if I'm utilizing his limit, it says that consolidation is permitted, but subject to conditions. And for conditions, it says clubbing for investments abroad, for opening bank account abroad is not allowed unless they are co-owners or co-partners. So abroad, we don't have this concept in India that we have that the first shareholder is the only owner. There, if you are two persons in a bank account, it is assumed that 50% is by each. Or you can specify that I have put 250,000, he has put 150,000. So then we are split in that ownership. But again, only with relatives this is allowed. You and me cannot. So the issue or the issue that has been in relation to consolidation for immovable property. Because of course, immovable properties outside India many times, and especially a lot of HNIs, they buy multi-million dollar properties outside India, and who have money can of course, I mean, no one's judging them, but to each their own. So here, prior to the August 22 amendment, these words were there. That purchase of property, if they are not co-owners, is not allowed, is not permitted. But if you see the new rule that has come, that is rule 21.2 of the OI rules, this word is missing. That what I've highlighted up, put in bold up. So, I mean, there is a certain school of thought in the professionals who practice FEMA that this co-ownership condition is removed, but I would still not tend to agree with that. See, there is one possibility that you can still undertake is I invest and I am the owner of that property. So the property is worth 1 million. I send my 250,000. My husband sends 250,000. My whoever sends 250,000, but they send it in their they send it, I mean, they buy it towards the purchase of property. One possibility is that everyone is in the contract and everyone holds a part of that property. The other thing, and in a lot of countries that issue happens, that a lot of countries don't do this, 5 owners, etc. Or some countries even have this thing that if there are 5 people owners, there'll be 5 agreements. Not like how we have in India that first respondent, second respondent, third purchaser, and seller is just one. So either that, or what we also suggest maybe is they are buying the property. So they are not remitting in Tanvi Vora's foreign currency. So in first remitting in their own foreign currency account and then gifting that amount to the my foreign currency account, because that I explained earlier is a completely prohibited transaction. What they are doing is they are paying for the property. They are paying directly towards the property, but the property is entirely in my name. So what would that mean is that they have gifted the property to me. And gift of property, there is no restriction. But of course, you will have income tax implications in India also. If it's from an immediate relative, you could get out of the gift provisions, etc. But you may have clubbing provisions involved if it is a minor that gives you that property. So a lot of other implications might be there. But one way out of this is that they buy the property but gift you their share of property. Again, what I mentioned earlier, we give a declaration in form A2 that I mentioned here. Underlying principle under LRS is that remittance should be from own fund. And where does this come from? This comes from para 8 of part B of the master direction on LRS, and as well as we're giving this declaration in A2 that capital account transactions are from own funds. They've also, but if you see the master direction and the FAQs in totality, it says that an AD bank can extend fund or non-fund based facilities for current account transaction. Say for example, going abroad for education. It is very expensive nowadays, and a lot of people are taking education loans. And it's an obvious thing. Not everyone, as a student, you do not have lakhs of rupees in your name. You very often need to take education loans, including even I need. But then there is a different school of thought that it says AD banks may extend fund and non-fund-based facilities, and only that has been given some kind of this. I would not go to a bank in the first place for a loan if I'm going for education, because I will then have interest on my head of so many rupees. I would rather go to a family member, a friend, that can you give me this amount of loan? I'll repay you once I start earning after getting this degree, etc. So that clarity is not there, but it does say for current account transactions, you can take credit facilities. For capital account transaction, it is still clear that you cannot take any kind of credit facilities. The question about the 180 days, this is one of the most important and most relevant amendment that came in, 510. That came in August 22, that's last year, 24th August. So this came a couple of days just after the new OI rules and regulations came in. What the words now read, I have highlighted and made it very colorful so that we break up the understanding of these words. It says, so the first line is simple. Investor who has remitted funds under LRS can reinvest the incomes earned on these investments. The received, realized, unspent, unused foreign exchange, unless reinvested, shall be repatriated and surrendered to an authorized person within 180 days from the date of such receipt, realization, purchase, acquisition, or date of return to India. So a lot of these, okay, if I may, before I give my explanation why this is relevant and very, very relevant, I'll just read these first two lines in this slide, which gives the pre-amendment words, and then it will be easier to understand what the change is. Before the amendment, what the master direction read was just two simple lines. Investor who has remitted funds under LRS can retain reinvestment in the incomes abroad. This is the exact same line before and after. The second line is where the change is. At present, the resident individual is not required to repatriate the funds or income generated out of investments made under the scheme. That's all that was there. Now, this one sentence has been made into another much, much bigger sentence, which goes to about 5 lines. So now when I come to the relevance of this is, and the issues, there are, I would say, at least 10 issues that I can come up with just this one sentence, and another 10 unanswered questions. And I'm sure most of the questions by participants will also come here. I will try to answer them, but some of them I can answer, some of them is only a trial and error method, or you go for approval to RBI or a clarification from RBI. We have been requesting RBI that please give some kind of clarification, what is included, what is not included. And hopefully we see the light of day in relation to that. So what it says is, so first issue that I feel and I see is, the first line reads, investor who has remitted funds under LRS. What would be an investor? You would actually, as such, by the dictionary meaning of investor, would be an investor in foreign securities. Or even if I broaden it, it would be investor maybe in any mobile property. So it would as such be capital account transactions. But that is only coming from the reading of the first sentence. Second sentence is where the googly happens. It says received, realized, unspent, unused. Received, realized can be in relation to any kind of thing. It could be like, for example, dividend. It could be professional fees, a lot of things. But now the word they used here is also unspent, unused. When would it be unspent? When you, for example, have taken foreign currency, gone on a trip abroad, you've not spent that money. unused is also in a similar situation, but it could be for other reasons also. For example, you've given a purpose of medical, you've given a purpose of studies, but it did not get utilized. It's still lying in your bank account abroad. So here it is much broadening up much more, and that is where the conclusion comes that it doesn't only apply to capital account transactions. This applies to all capital as well as current account transactions. Then it says these amounts unless reinvested. So the next issue is, what do you mean by reinvested? And also the issue about the purpose for which you remitted in the first place and then you reinvested in something else, that issue also comes. So in my next slide, I have listed some of the issues and we'll discuss them. And at that point, because this is my last slide on LRS before I move to TCS, we can even take up at the same time the questions that have been raised. What it says is, shall be repatriated and surrendered within 180 days. So when does the 180 days time also begin? That is a question. So today I have received, so the dividend has been declared by the foreign entity, for example. So today is the day that it became, it became my receivable. So I would say, at least here in this case, it does not directly apply this, but once they've declared and paid the money to me, it is now payable and it's come to my bank account outside India, or it is a realization outside India. I have 180 days from that day, or do I get 182 days to reinvest it? And then if I've not reinvested it or utilized it, then do I get that 182 days extra? I'm not sure if my point is coming across, but when we go to the issues again, I will address it maybe with an example. Also, it says unspent, unused, unrealized. So let me give a situation where I sold my shares to a foreign, to a non-resident for $100. $100 is too small. Let's make it $100,000. So $1 lakh. I can use that money for say a trip abroad I want to go to Disneyland. I use that money. It is used now. It is no longer lying idle. So that is satisfaction of this clause. It should not lie idle is the point. It can be certain transaction you have done for something. Now you receive that money back. Now you utilize it for something else. Because it needs to remain unspent or unused forex. My example, I should correct myself. My example of sold for shares sold and then utilizing that money is slightly also correct because you have 180 days to utilize it. But the FEMA overseas investment rules gives you 90 days to repatriate any disinvestment from foreign entities. So although 180 days is allowed in the first clause, specific clause, if it's in relation to ODI or OPI, it gives you 90 days to bring that money back to India upon disinvestment. So that is actually a lower limit that is. So some of the issues, I specified the first one, that is applicable to whom? Only investors. How is the question of investor there? So there we can always say that it is any funds remitted under LRS. Because that is the word, investor who has remitted funds under LRS. So anyone who has remitted funds, or any funds that are remitted towards LRS would be considered under that, under this paragraph 16. Second thing is also, you would also include incomes earned on those investments. So I've made an investment and I want certain income on that, say dividend, etc. All these incomes would fall under paragraph 16, and also sale proceeds on investments. It could be other investments as well, which fall outside overseas investment rules and regulations. So second issue that I've already discussed and addressed. Next question is about when do you apply this from? So the rule came on, the rule came on 24th August 2022. So what do you say? As of that date, if funds are lying idle, I have to bring the money back to India on 25th August 2022? Or do I say that 24th August, this rule came in? So from 24th August until 19th February, that is the 180 days deadline, I have time to utilize that amount towards a certain permissible activity. If I don't do that, then I have to get it back to India by 19th February. And why this is important? Because this rule was never there before. So there are cases where 10 years ago, and people have, I also know personally, and I'm sure you guys also know personally of transactions where people would utilize their LRS limit, 250,000 or whatever amount of how much ever savings they have, to put that, to remit it into their foreign currency account outside India, their normal LRS account, which is a permitted account. I am still not saying it is not permitted. What they would do is they would just park that money there. And sometimes, and many times it has happened that they want to buy a property of say 5 million. Of course, that much limit is not there. So they would spend 250,000 now. Next year they'll send 250,000. Next year they'll send 250,000, and they want to make their entire balance over there. So at the end, they can buy that property. But then now this 182 days condition comes in. Or you have sold a property, you already purchased a property, etc. You sold it for 5 million and that money is lying in your account since 2010. Let's take that example. So of course, if it's lying there since 2010, it has already been lying idle for more than so many years, forget 180 days. So on the very day of the amendment, do you bring that money back to India or you count the 180 days from that day? And the biggest $1 million question is, what is the meaning of reinvestment? The meaning of reinvestment, and that is where the first query that came from one of the audience members is FD considered as reinvestment? There is no specific guidance still provided by RBI, and we have been asking them time and again for some kind of clarifications. But in the entire professional circle, what discussions have been happening and what personally I would take as the meaning of reinvested is something that is then that money does not lie in your control. So FD per se, and this is the question that everyone asks, in my view, would not be considered as reinvestment, because that FD also at the end of the day is your money that is lying in your control in just a different, sometimes in a lot of these countries, you don't even have a different account. It's just, given a title, but it's still in your control. You can break that FD at any time. You can do whatever. You can just remit that money back. FD per se may not qualify as reinvestment. And we have received this answer from certain RBI officials at conferences. We don't have a written reply from any, any RBI officer or from the RBI as a notification. But certain RBI officials at conferences have said that they do not consider FDs to be a reinvestment.
One very interesting query, I'll just interrupt. That if the funds are sent abroad to son for studies and other expenses, one has to now monitor whether it is spent. See, all these rules are there only to monitor the funds there.
Correct.
Yeah, so you have to know.
Yes. So again, this idea, and also the way out as a consultant, what you would probably give a client that comes to you is, for example, if it's for studies, what would generally happen is you send the money to the foreign institute, then so of course it's paid, it's utilized, everything is done. What many times happened, and when I also went for my LLM, what I did was, I had taken a payment plan with the institute that I will pay you whatever is the fees divided by 12 or divided by how many months, and I'll pay you that, or I'll pay you it at end of every term. Every institute has their own payment plans. But what I would do is I would take the money into your account outside India whenever we have good, the forex rate has dropped or whatever. So as to utilize at the end of the day, we are CAs, we have to save money. So, utilize the favorable market conditions, etc. So there are two possibilities. Here in this case, I myself was remitting to my foreign currency account outside India. Student has the option to be considered a resident or a non-resident as per the RBI circular. So consider myself a non-resident, and LRS does not apply to me. I am a non-resident, LRS applies to only residents. So then there is no question of 180 days. So that is one thing. And so that is when we say, going back to a situation where someone has gone for graduation, generally you don't have major incomes, etc. Your parents are generally funding you, and you are remitting towards your child's education fees, etc. If you are remitting to your current foreign currency account, you create a foreign currency account there, you are still a resident, and then you cannot keep that money outside India for more than 180 days.
So you have to monitor.
Yes, then you have to monitor.
Yes.
But the way out of this is your child will be a non-resident. You remit to the non-resident child's bank account. Then LRS does not apply to the child.
If the money is transferred to child, then no need to keep a record of it.
You're considering that child as a non-resident, or if I'm going myself as a non-resident. But then in that case, all the the FEMA applicability that applies to non-residents applies. So for example, because of my change in residential status, I have to convert my resident account to NRO account, etc. And which is the right way to do it. But if this RBI circular for students is very interesting, it gives you the option as a student. Do you want to consider yourself a resident or a non-resident? Because sometimes there are people who go for specific case, courses, 1 year course, 5 month course, 2 year course, and they are back. So in that case, they don't want to go through that whole hassle of converting and then reconverting, etc. So they give you an option.
Nice, thank you.
Yeah. But yes, okay, so the next question, and this was also one of the queries raised for change of purpose. Yes, this issue does lie. We also, brought up this in a lot of circles, that section 10(6) of FEMA specifically says that you have to utilize the money for the purpose for which you have declared. But here, I declared that I am sending the money to my bank account. Now, the master direction itself requires me to reinvest that amount, to utilize that amount. So then that money could be utilized for travel, it could be utilized for donation, it could be utilized for anything. I want to, of course, anything means anything permitted under LRS because I am a resident, but I need to utilize that amount or I need to reinvest it. So of course the purpose code is going to change. In, I would say 80 to 90% of the situations, the purpose code will change. The very few situations might be I had sent it for certain property and I use it for another property, which is where the purpose code remains the same still. So in this case, can the purpose code be changed? There is no clarity on this. You are going in contravention of 10(6), but it is the second level transaction. And it would be very difficult to keep on check on this, because then you have to do first in, first out. I have got 1 million from here, 100,000 from here, 200,000 from here, which it could be for different purposes. And then I'm utilizing somewhere else, or I'm utilizing an entire big chunk towards different purposes. It is really going to be a hassle to track all of these things. And what we recommend is at least to intimate the banks that yes, my purpose for which I had sent it was X. I have now reinvested it because of the condition or for whatever reason. Even in the past, in fact, when this reinvestment condition was not there, banks would accept that intimation that you sent for this and this is the other permissible transaction. Okay, we will update the system. Some banks did not do that because they did not want to have excess work on their heads. So they refused to accept that. But now in today, we still continue to recommend our clients that if you're changing the purpose, just intimate by a letter that this A2 form, may I put this declaration, Now I'm utilizing for this purpose. Thank you. That way.
One question they have asked that loan is taken and repaid in the same financial year. See, then to anything, any amount it can be.
No, no, no. So loan,
Yeah.
you-
What if the loan is taken and repaid in the same financial year? Still, will it be counted in LRS limit? See, otherwise, if it is repaid, then it will be minus, or then again new limit will come, or what?
no, so this is always towards remittance. So there is no
Yeah.
plus minus that happens.
Correct. So let me
You
clarify.
have taken the loan, it is considered that year. Repayment could be in the same year or the next year,
Yeah.
but it is utilized towards your
Not towards the balance outstanding. No, it is not. It never says that it is balance outstanding.
correct, correct. So yes, there are, especially if it's loan in rupees that you're giving. See, it is a bank to bank transfer at the end of the day, especially when it's loan in rupees. The banks do not have a way to track it. At least when you're doing a foreign remittance, the bank, before you make the remittance only, they will stop you and be like, मेरे को ये भर के दो, ये A2 भरना है, ये करना है. Is it allowed? It is not allowed. When you're doing a rupee to rupee loan, but it falls under the LRS because it is specifically mentioned that it is rupee loans to NRI relatives. It is hard to track. So it is actually your own responsibility to, include that in your LRS limit, at least in your mind, if nothing else. And it's the best would be to suo moto go to the bank, tell them that I've undertaken this transaction that falls on the LRS, and therefore this is my form A2, your take. But even if you don't do A2, in your subsequent A2 that you file, you should always include that as a LRS transaction undertaken in that year. Because if you see a form A2, you have to give all the transactions that you've done in the year, as well as proposed transactions in that year.
Right.
So any questions here I can take up?
One is like, does 15 CACB require for our LRS remittances? So,
Not all.
Yeah, correct.
It depends because 15 CACB, it depends on
Yeah.
what the recipient of the transaction is. So it could be an LRS transaction from your side and you're undertaking a payment to a non-resident. In that case, 15 CACB would apply. But say, for example, you're remitting to your own foreign currency account, technically it is not required. Yes, banks may insist upon it because it is a foreign currency transaction at the end of the day. But and there is an entire, if you see Rule 37 BB, there is an entire list of purposes for which 15 CACB is exempted. Some of which include remittance to your foreign account, remittance towards maintenance, etc. Some of them are listed in that purpose codes. And if it's towards that, 15 CACB is not required. I have had major, to and fro's with a lot of banks. They still insist upon it because that is, I mean, I shouldn't be saying it on a forum, but yeah, that is the irregularities at the back end with a lot of teams. Certain managers, may not be completely updated on the rules, or I mean, the simplest answer is they don't want to take a risk, even after explaining the rule to them. So yes, you may need to provide it, but yeah, the rule specifies that in certain cases in XYZ purposes, F15 CACB is not required.
People are requesting to share the PPT with them.
Sure, I will.
Yeah. One question is that, is the understanding correct that the amount an individual remits for participating in overseas ESOP plan would be subsumed under the LRS limit of USD 250,000? If this is the case, and presuming a scenario where the exercise price is higher than USD 250,000, will it require RBI approval? I think yes. No.
Sorry. I'll need a little more context. Is the question in Q&A?
Yeah, Vijay Shetty ji.
It's not appearing to me for some reason.
Fourth or fifth question. I'll copy it.
Sure.
I've just again copied it.
I don't know still. So if you could just break it up again a little bit. It went a little too fast. I couldn't hear.
Should I read it again?
Yeah, please.
Even I don't understand this question clearly, but I'm just.
I got it now. So
Yeah.
the amount an individual remits for participating in overseas visa plan would be subsumed under the LRS limit. Yes, because any ODI or OPI would fall under the LRS limit. If this is a scenario and presuming a scenario where the exercise price is higher than USD 250, will it require RBI approval? Yes, it will require RBI approval. And it is still to be known, seen whether RBI will really give an approval or no in such cases. If there are very strong business reasons, bona fide reasons, yes, approval maybe mostly should be given. But yes, if it's over and about 250, it will be needed.
Most of the questions you have answered during the your this.
So then I'll go to the next important
Yeah,
multi-change LRS TCS provisions.
Yes.
It is, I found this photograph and I had to put it because you really need a magnifying glass to understand and to keep track of what is changing every day. So it was a joke, but I needed to, when I found this, I'm like, I'm putting this in my PPT.
Nice.
So what has happened is, I mean, those at least fluent with the TCS regulations. So in Finance Act 2020, the original amendment came in relation to LRS on, TCS on LRS transactions. So at that time, what came was 5% TCS was applicable on remittances out of India under LRS with a threshold limit of 7 lakhs. They had that time also provided a concessional rate of 0.5%, where remittances for education is taken out of loans from financial institutions, specifically from financial institutions. It cannot be loans from relatives, etc. And this is, of course, obvious because if I'm taking a loan from a financial institution, already I would be paying 8 to 10% interest, which is already keeping on compounding. And on top of that, if now you ask me to pay 5% TCS and now with the new rules, with the new rates, etc., even more, it is a burden on that person who's already taking a loan. So they've given a concessional rate of 0.5%. And there was no threshold limit provided for overseas tour program package where TCS applied for 5%. This was the plain and simple TCS regulations when it came in October by Finance Act 22, and it was applicable from 1st October 2020. Sorry, mixing up some of the dates. Then what happened is in Finance Act 2023, the amendments were made with effect from 1st July 2023, and this Finance Act was passed on 24th March 2023. That I've just, for extra information, I've provided here. Here, what the change was, what was at that time proposed was the rate would increase from 5% to 20%. I hope everyone understands at least the background of how TCS works, and I don't need to go into those basics.
That is clear because everyone is.
Yes, I mean, I'm presuming everyone is the CA, so I should not go into those basics, and then we won't have time left for questions. So what also then they provided was a threshold of 7 lakhs, which was available for education and for medical purposes. What one very nice amendment and very smart amendment that they did was in the 2020 amendment that came, the words used were TCS on remittance out of India under LRS. When I explained LRS earlier, I gave certain examples, say for example of loan, etc. in INR only, where although it is included, or gift also, although it is included under LRS, there is no actual remittance happening outside India. Even payment to a tour operator, which you're doing in India to to a travel agent to your bookings is considered under your LRS limit, but the payment is happening in India only, sometimes in Forex, sometimes in INR, depending on how you structure your transaction with the agent. So people, and there were cases happening that they said the remittance is not happening outside India, therefore TCS does not apply. So they removed the words out of India. The change only made TCS on remittances under LRS. So any kind of LRS transactions. And the concessional rates that were provided earlier remained. Then the set of one after the other amendments that came in. What happened was on 16th May, an e-gazette notification came in that amended Rule 7 of current account transaction rules. I listed some of the current account transactions that are permitted, etc. Of course, I didn't go through each and every rule in that. There was one rule in that said that transactions undertaken on international credit card while traveling outside India would not be considered under LRS limit. This, in my view, and which has been also accepted by a lot of this, was genuinely an unfair rule, because HNIs, so high net worth individuals in India who have ample amount of money, have high credit card limits, sometimes have 5,566 credit card limits. What would happen was they would go lavishly live outside India and undertake transactions over and about 250,000 USD based on their credit cards. And the specific exemption provided that any credit card payments when outside India was not included under the LRS limit. Mind you, it was only for meeting expenses while outside India. If I undertook any kind of foreign transactions while in India on those credit cards, they were always included under the LRS limit. So what they did was this, the notification said that this rule is now deleted. That would mean that all credit card expenses also when you are outside India would be included in your LRS. Now, when you read TCS and this LRS amendment to the current account transaction rule under FEMA, what happened was, therefore, even these transactions fell under the TCS regulations, and TCS of 20% applied to it. I mentioned here that the rate increased from 5% to 20%. So any and every kind of transaction became more expensive. What this affected was, and also IDC, so any kind of international debit card transactions pre this amendment, whether in India or outside India, was always included in LRS. So why that specific, higher throne was given to international credit cards while outside India? And there were reasons when that exemption was there, but at the moment that reason did not stand good anymore, so they needed to get everything on par. There were FAQs also posted via press release explaining what is included in this, what is current account transactions. It provided that if an employee is deputed by an entity and the entity bears those expenses, then it was not covered under LRS and therefore TCS will not apply. A number of FAQs were clarified by this, and the clarifications provided a lot of clarity that time. But what happened then was that there was a lot of hue and cry on understanding how this 7 lakh threshold which was available. So threshold of 7 lakh was available. Sorry, before that, I think I have
Earlier slide.
Yes, sorry. This was the amendment. Then what happened was the Ministry of Finance issued a press release that payments by residents, because I think for 3 days it was in the news. If any person here has not seen those news, it would be, they would have been busy with something else, because it was in the news, on WhatsApp, on all the news apps everywhere non-stop. We were receiving these updates. Even the forex dealers were sending emails, updates. Even the banks were sending updates that now all transactions, including your credit cards, would be covered. And this. And what would become difficult is how to regulate that. Because I am sitting here, I am buying, I'm renting an Airbnb on Airbnb.com. I'm paying in foreign currency. How does the credit card know? So here in that case, it still might be possible for the credit card company to understand this is a foreign currency transaction. But say I am paying to Make My Trip India. Make My Trip India is booking a ticket for you. In fact, if you guys will now see when you're making a book, even in the past and even now, when you're making a booking on Make My Trip, they will always ask you for your PAN card. And it says over there, this PAN card is being taken to update your LRS transactions and towards A2 form. Although you're filling it online, even bookings on Make My Trip, because they are backed by foreign currency payments and it is towards payment for travel abroad, it is considered under your LRS and you have to always provide your PAN card and your LRS limit is utilized towards even that. So there was a lot of issues on how to track this entire thing. I'm making payment here, I'm making payment there. How will the banks know towards what payment it is? Then there were a lot of questions in the industry that how will the bank know that I'm paying it for the company or I'm paying it for myself, business travel. How do you regulate that? Then there is issue of corporate cards. In corporate cards, what happens is the payment is done by the corporates. The the entire funding, the entire approval of the limits, etc., is done by the corporates. But the KYC, when you get corporate cards from companies, the KYC is done of the individual who is receiving that card. So will you utilize it towards the payment of the company, so corporate, so then TCS does not apply, or because the PAN of the individual is attached to it, it is considered as an LRS transaction. There were a lot of issues and these issues actually hold good till date also. What it said was what the Ministry of Finance clarification after the entire debates, etc. happening, they made a clarification that payment by resident individuals using ICC and IDC, that's in credit cards and debit cards, up to 7 lakh shall be excluded from LRS. So with this press release, which threshold they had removed, they got the threshold back, but only for transactions from credit cards and debit cards. Then an entire UN cry started by forex dealers that you are pushing everyone towards credit cards and debit cards. No one will buy forex from us because you are giving them a limit over there and you're not giving us giving the limit here. So again, a lot of those representations happen to government by forex dealers, etc. All those things. At the same time, if credit card, it is per person credit card, credit and debit cards per person limit of 7 lakhs. Now I have 3 credit cards from say A bank, B bank, C bank. What if I undertake a transaction on that credit card and I swipe 250, 250, 250 at the same time right now, USD. I don't have that much money, but assuming I do that, how does the bank track whether that LRS limit is being surpassed of 7 lakh rupees? And I need to, now that bank needs to deduct TCS, charge TCS extra over and above, because TCS is always the opposite way. So that there is no backend facility where banks can share data that X person having X PAN number has done these transactions on the credit card. And in fact, banks may not even be willing to share that information because it's their internal financial data that they're sharing. Then there were people then assuming that what will happen is per credit card, you will end up having 7 lakh rupees threshold limit, which is also not the right interpretation. But again, if banks are not able to track, this would become an issue. And then everything would go back to self-declaration, and then self-declaration in a country of partly corrupt or partly negligent. I will not use the word corrupt, that is wrong of me, but partly negligent individuals, this limit would, be misused, or some people might not even know that it's applicable.
Let me answer. Later on, we will get in AIS, so they will ask us. why you-
Exactly. But then how do you go backwards and then,
In future, they will ask, na, they will raise a letter to us that why you give.
but that will come to
It's going
us.
to happen. So we have to be very clear. This information will be available to them. And they may ask
Agreed.
question after 1 or 2 years or 3 years. That why you gave the wrong information. Like
Agreed, Simaji. But here, the
have-
bank, it's the bank's responsibility or the credit card company's responsibility to
so
charge
it is the SSC's responsibility to give the correct declaration.
correct information, yes.
Yeah.
But bank becomes a default for not charging that TCS.
Yeah.
So it is kisko pakde. And so the whole, the FAQ that I mentioned that on which date is this? Yeah, FAQs on 18th May that were published by Ministry of Finance. They have given entire reasoning also why they brought in this TCS and why they increased the percentage also on all LRS transactions. One of those requirements is because they want to firstly, keep a track of high net worth and high spending individuals which do not have commensurate incomes. In your income tax returns, you are showing 10 lakh, 5 lakh, 7 lakh income, but you're going and making foreign trips of 30 lakhs. Where is that money coming from? So they want to track that. That was one of the main reasons of even bringing TCS into the picture. See, they are very smart, and which I agree. They are saying at the end of the day, you are getting credit for TCS. It is not that we are charging you extra. You are getting credit for TCS, how you get credit for TDS. The only issue right now happens is the liquidity issue. Because right now, if I'm spending 100 for a foreign trip, I would have to end up spending 120. And I would get that 20 back if my income tax, everything is covered, etc., as refund after a couple of months. So it is technically just a liquidity issue, not a money that you are being charged now. Your foreign travel is becoming more expensive, or any kind of foreign currency transaction is becoming more expensive. Okay, so this was the past, what happened. Now, what happened later on 28th June is the government of India, so the Ministry of Finance through Press Information Bureau released a press release that the credit card companies, the government in the back end is not ready for implementation of this, and therefore they need to give the government and the companies more time to implement the entire TCS regulations. So they provided 2 clarifications in this press release that they are postponing the applicability of these revised rates, which was increased from 5% to 20% to October 2023. And the second clarification it provided was there was no change in the rate of, so what would happen is they are restoring the earlier rates that were applicable pre this entire amendment that came in. I have made a bird's eye view of now at present what the rates will apply, because as I mentioned, there is a to B, B to C, C to A, C to B, a lot is happening. And what they clarified in this was that even that press release that I mentioned that deleted Rule 7, it restored that Rule 7 once again. And therefore, it meant that credit card transactions outside India would not be included under LRS, and therefore TCS would not apply. In my view, this will be temporary until the whole entire implementation process is, they have something in place. I don't know how long it may take. I don't think it may be done by October as well, but we can always.
But in such cases, I will make payment outside India only. Suppose I'm going to any country, then I will pay there instead of paying advance here.
Yes, very true. So we just had a laugh in a very small, within 5-7 professionals, we were discussing all these changes and all. It was just a joke that we made. this June amendment again, because now it is still back to status quo. But pre that, what will happen is I have a relative in say UK. I will go to UK. I'll tell that relative, tum sab kharcha karo. So no TCS, nothing. When that relative comes to India, I will tell the relative, मैं तुम्हारा सब खर्चा करूँगा. So that person is also saving on forex, and that is how you repay. Technically, this is not permitted under FEMA, but it is just a joke that we had, that we will now travel to countries only where we have someone to spend for us.
Yeah. No, it happens in friends, like
Of course.
my daughter, she's doing for her and she's doing for like.
Yes, of course it happens.
Yeah.
So then the last two things that came. One was this last that amendment that I mentioned, that on 30th June, e-gazette notification came once again that that the deletion of Rule 7, that is that credit card transaction rule, is postponed, which would mean that they are restoring the old rule once again. And it mentions that retrospective reinsertion will be applicable from the first Gazette date itself. So in between from May to June, they don't want any kind of complications, anything. So it's retrospective re-inclusion, I would say. And the other thing on the same day is that CBDT issued Circular 10 of 2023, and it provided, so the first 2 pages of that circular, just duplicated the press release requirement. But what they provided after that was, they provided a list of 8 FAQs that provided guidance in relation to this TCS and LRS issues that have been burning around. Some of those are helpful, at least in relation to the TCS portion of it. And what I have done is, I have just listed the key takeaways from these FAQs. Is that, firstly, what I already mentioned is current account transaction for ICC was postponed. So therefore, at the moment, it is not included under LRS. The 7 lakh limit that is being provided is a per year limit and is a combined threshold limit. So I don't have a 7 lakh limit for education, then a separate 7 lakh limit for medical, separate 7 lakh limit for foreign travel, etc. It is a combined 7 lakh limit for all purposes. Then the threshold limit is qua remitter and not qua the authorized dealer. So I, as a person, as an ABC PAN, have a limit of 7 lakhs. It does not mean that I buy forex through a forex dealer for 7 lakhs, no TCS. Then I buy forex through HDFC Bank, then separate 7 lakh limit. I undertake XYZ transaction, that is a separate limit. So that does not apply. It is qua remitter. The only place where separate limits are applicable is for LRS remittance is separate and overseas tour programs is separate. Although I would not consider it a threshold limit under overseas tour program, because when I come to my very last slide, overseas tour programs from October has a rate fixed from starting from 0. So there have been, the FAQ also provides clarifications on purposes and codes that are included under medical and education. So if I may just, read some of them, and you guys can also refer to rule circular 10. What they've for medical, they've included not only, of course, the actual medical expenses, but also remittance for purchase of tickets to travel abroad for that medical treatment, and also for the attendance tickets and other day-to-day expenses also. And they've specified which purpose code under Form A2 will also fall under this. And this is important because there are concessional rates provided for medical and educational. For education also, the circular has provided that remittances will include for the ticket of the student who's traveling overseas, for the tuition fees, as well as other day-to-day expenses. And this is important for other day-to-day expenses. Although there might be a question on how you compute this other day-to-day expenses, because I will have accommodation expenses, food expenses, groceries, travel, bus pass, train pass, whatever you need. How that will be computed will be difficult, and maybe it will be based on declaration, that you give a declaration when you are remitting that money to your bank account or your son's bank account or your child's bank account, that this will be the other day-to-day expenses that will be required, and that is why the concessional rate applies. The last two clarifications that these FAQs have provided, the CBDD FAQs, is that so if you're buying only international travel tickets from an agent, or a tour operator in India, or you're buying only hotel accommodation, then it is not considered as overseas tour packages. It will be a normal LRS transaction for foreign travel. What qualifies as an overseas tour program package has been specifically explained. And what it says is, to qualify as overseas tour program package, the package should include at least two of the following. And what are the following is international travel, hotel accommodation with or without food, or boarding or lodging. And the third category is any other expenditure of similar nature. So if I'm taking from the same agent tickets also and hotel accommodation also, then it is considered as tour program package, and there different rates apply. Why this is important is when I come to my very last slide, where I have given a bird's eye view of the TCS rates. So present rate, and this will be applicable until 30th September 2023, is there the threshold and concessional rate if it's from loan, or no concessional rate, but 5% for any kind of education expenses not out of loans. These same rates will continue to apply after October. There is no change. Medical treatment, same thing. You have a threshold limit of 7 lakhs. Anything above 7 lakh, then you have a rate of 5%, and that same rate will be applicable from 1st October 2023 also. The change is where in the tour packages and any other, so the residual category. For tour packages, as of now, as of today, there is no threshold limit allowed, but a 5% TCS applies. After October, what they have done is, there is still no threshold available. So from 1 rupee itself, TCS will start to apply. But in that case, what they've said is up to 7 lakh, the rate will be 5%. But if you undertake, foreign tour package expenses, you pay towards that. If it's above 7 lakhs, directly 20% will apply. And for any other remittances, and mind you, for any other remittances, even if you're buying shares of a foreign company, so you're making ODI investments. Earlier, we never realized this, but if I'm making ODI investments of say 100, you're going to have to pay 105 as of today to actually buy those shares. And after 1st October, it will be 120. So you are in fact having to shell out extra. So as when you're undertaking any kind of structuring deals, etc., it will be very important to keep in mind this extra 20% that would be payable, because it is important when you structure overseas investments, etc. And when it's a small entity that you're investing towards in the MOA, it may not make a very big difference. But when it's shares that you're acquiring of already large companies, etc., it is very important to take into consideration that extra 20% that would need to be paid. Even for real estate, you will have to shell out extra. So this is the bird's eye view of the rates that would apply.
So in case if anyone is dealing in shares, foreign shares, then up to 7 lakhs, there won't be any TCS, and after it reaches 7 lakhs, then there will be TCS.
Yes. So as of now, it's 5%.
Total of sale and purchase both.
Sorry?
Total of sale and purchase both. Not like
No.
sale.
No. So any kind of remittance that you're making towards purchase of shares.
Okay, fine.
For sale, you'll have that idle funds requirement that 182 days ke andar leke aao wapas. That requirement will apply.
So what, like nowadays, people are investing in shares in foreign companies. So what, can you just tell us about?
ODI investments, that is investments in unlisted companies, So that is done through Form FC that you need to file. And of course, you have a list of other rules, regulations that apply. It has to be in bona fide activities. What I ran through that slide earlier. So if it's ODI, that falls under, this category. So any money that you're remitting towards ODI, so unless investment in an unlisted foreign company, you have valuation. So if it's an you will have valuation to be undertaken, you will have set of documentation, etc. One of the biggest important thing is valuation. So if it's an already existing company, you will have to undertake the valuation of that company. The value will say come to X amount, but X amount has to fall within your 250,000 USD. The good thing that these regulations don't clarify, but it's good that we can say that, is because say you're investing 250,000 USD based on the valuation of that entity. You need to now shell out 250,000 plus 20%. So another 50,000 is what you need to shell out and pay to the government as TCS. You of course will, again going back to TCS, how it works is you will get credit for it. But yes, you have to then have your financial planning done in such a way that you have to have that liquidity in your books, because again, you cannot take loan for these transactions. When I went through that slide of own funds requirement.
Fine.
So,
And
a lot of
investment
it
in
is
like
going-
Amazon, see, one of our client is investing in Google and Amazon shares.
Correct.
So in that case, there won't be any TCS, or it will be
So
there.
portfolio investments are permitted by individuals. That is not an issue.
Correct. Okay, fine. Thank you. They are permissible.
Yes. But again, TCS will apply.
As a TCS will apply. But I
Yes.
have not seen TCS in his. Okay, I'll just take.
Yes.
Fine. Thank you.
No problem. Any questions, I would be happy to address.
Can you explain what is quar emitter?
So when what I meant when it's core remitter means that I am the remitter. I remit for various purposes is one thing. Plus, I could remit from various different sources also. I could purchase, I am planning to travel, I could purchase foreign currency from a Forex dealer.
Yeah.
Or I could even put something on a Forex card now that Forex cards are also very.
Yeah, we are doing that.
Yeah. So, but that also is included in your LRS limit. So,
Oh.
you're purchasing, it is as good as purchasing Forex only, right? It's just Forex in digital form and not Forex in actual form, but it is still purchasing Forex. So, one source, one person could be, I'm authorized dealer could be a Forex dealer. I could also be undertaking transactions online through a foreign website where I'm paying for my travel abroad. That is could be another purpose. My third purpose could be completely different, buying shares of a foreign, foreign company. You have different purposes, right? So it just means that your 7 lakh threshold, which is there, it includes these transactions. It does not mean 7 lakh for one, 7 lakh for the second one, 7 lakh for the third one.
Correct.
At the same time, if I'm buying it for the very same purpose, let's take, for example, for travel, but it could be different payments I'm making to different people. And I'm also buying Forex from a Forex dealer. I'm also buying Forex from, say, HDFC Bank.
Yeah.
Different things. It does not again mean that it's different persons that I'm dealing with. So every time that different person will give me 7 lakh limit. How when we rent out a property, it is, per year total for a specific property, right? If I'm not mistaken.
Pardon?
So when you're in TDS, it is qua the payer, right? Your
Yeah.
limit applies qua the payer. Here, the limit does not apply qua the payer. It is qua the remittee. So I have just one limit of 7 lakh. That is, the crux of it all.
Okay. See, one question was that from the co-owned property as per LRS, any income is received. Will it be income of all the co-owners in the proportion of their investment? I think yes.
Yes, that is preferable. But of course, if the specific document specifies it's only towards an X person or a Y person, it depends on documentation also. But in case of any missing documentation, yes, it has to be assumed that it's based on the division of the co-owners.
Okay, fine. But can we make a documentation like, no, okay, it's a co-owned property and income will go to X, not Y?
Yes, of course.
Okay, fine. Thank you. Someone has asked, can we take a loan for discharging 20% TCS? I think no.
There is again nothing that it says it's not allowed. So therefore, they have given that exemption that if you are using for medical, etc. Where's my slide again? I'll just. So this specific exemption that they've given when it's from loans, of course, if it's loans from a recognized financial institution, they themselves have given a concessional rate of 0.5%. That is a very small percentage of TCS. And
the question is, can we take a loan for discharging 20% TCS?
No, sir, I'm coming to that only. That the thing is that it is not nowhere said that you cannot take a loan. But at the same time, when you are itself spending out of borrowed funds and in permitted places where you are allowed to borrow, they know that it's already a burden that you're going to have on your head. So they don't want to increase that TCS. Because it's like saying, if I have to pay 120 for $100 of education, so I have to take now 120 ka loan and then pay interest on the 120. So they know it is going to be a burden. So they've already given a concessional rate. So for other transactions, it is assumed that you're doing it from your own funds. I'm talking about an economic point of view. The reason for bringing this TCS is also that. So from an economic point of view, they are assuming they're doing it from your own funds.
Yeah.
So they put a higher rate and higher burden on your head. But it does not anyway say that no, you cannot take loan for discharging TCS.
Fine.
That was an interesting question. First time for me.
Yeah. Yesterday only somebody was saying that in Indian market, say I'm investing in foreign market. So if they don't have to pay anything, then I think that is more beneficial.
True.
He's investing in shares in Amazon, Google, and all foreign companies. So no tax liability or like that.
Mr. Sham had a question. If I remit 1 crore anna to my daughter, do I need to keep track of what she does with this amount? So if I assume that your daughter is a non-resident and you've remitted it to her bank account, no, you do not need to keep track of that money because she is a non-resident. Now she is the owner of the funds. So technically LRS and the 180 days requirement does not apply to her. But yes, there are cases that we have seen and we are under compounding for a certain case where what has happened is the account is opened in your name and your daughter's name. You say that it is for my daughter, but technically the account is in your name. Then if that is the case, you are LRS applies to you because you are a resident. And therefore, then you will have to keep track of that money. And it's just your daughter using that money. It again depends on the ownership of those funds and the account that it is held in, whether the owner of that account is a non-resident or a resident.
No, you said if they say that we are accepting the NRI status, then that scenario will be different.
Yes. So daughter, I mean, the situation of student is one, but nowadays even kids have, Indian residents have their kids who have settled outside India, but they keep sending them money, etc. Sometimes as gifts, sometimes as different, or just as maintenance, etc. If it is gone in the daughter's account and the daughter is the owner of that account, then no, you do not need to keep track.
But you said that if she is accepted that NRI status, then only. Otherwise,
No,
so you have to
so
keep.
if she is anyway living outside India, say she's married outside India, she's working outside India, etc., then it's not a question of if, right? Then she is actually a non-resident. Only in case of students, there
Yeah.
is a specific circular 40, which gives you that specific option, I would say. That do you want to consider yourself as a resident or a non-resident? It's only very, very specific to students. In cases of normal employment, in cases of normal immigration, sometimes it just happens they're married and they've gone outside India, or they're working outside India, whatever the reason be. There is no question of choosing to be a resident or a non-resident. You are a non-resident as per FEMA. Any other queries? I
think you have answered this, that if tour package bought from a travel agent abroad, TCS will have to be paid. Will bank collect such TCS, and in 15 CB, there will be no TDS on such transaction?
Yes.
Okay.
In case of exercise price for acquiring shares of I think I answered this. Yes.
Yeah.
Suppose I am authorized dealer to own drugs, so I can help you.
I think this last question, suppose I am authorized dealer, I think everyone will take this declaration now onwards, no?
Yes, yes.
Mhm.
But of course, in the meantime, government will come back with some kind of tracking mechanism where they can internally track which PAN has utilized how much. And in fact, in one of the circulars, they have mentioned in passing also that once this is ready, it will be applicable. So in the back end, there is a lot of development happening where they're trying to have a kind of a one place tracking system where you can put the PAN number and see how much of the limit has been utilized or how many transactions has been done. Of course, there is a lot of privacy issue in this also. So certain dealers, like authorized dealers or to travel agents, etc., there will have to be some kind of privacy containment also of these transactions, but they are trying to create some kind of backend where you can track immediate on-time transaction flow.
I think you have answered all questions very well.
Thank you.
Any other questions, if anyone wants to ask? Please raise your hands.
Yes, that also will be.
Yeah. Yeah, Julie, you can take over the mic.
Thank you, Seema. Am I audible?
Yeah, very good.
Okay. Thanks, Seema, for giving me the further opportunity to give the vote of thanks to CA Tanvi. Am I audible? I think.
Yes,
Is there
very
any issue?
Yes, no, it's very clear.
Okay. Thank you so much. Yeah. Okay. Tanvi, this is please accept our sincere thanks for accepting the invitation and giving the insight on this very, very, very important topic of TCS on LRS to the WOW series members. We acknowledge your in-depth knowledge as well as on the subject matter, as well as your ability to deliver the same in a very lucid manner. I think you have answered all our questions, I mean, in a very, very simple manner and in a very patient way. I understand this topic is so, I mean, you can understand this topic is really very delicate topic, and you have actually answered all the questions very nicely. Thank you for that. Indeed, it was your presentation was also wow presentation, I can say. So please accept the vote of thanks on behalf of our WRC and the WOW series members team. Thank you so much.
I will also say to Tanvi, really, I appreciate the way you have handled it and the way you have explained and the way you have answered. Excellent presentation. Thank you so much.
Thank you so much.
Thank you. Thank you,